Welcome to Trading Lounge and the Bitcoin report for Thursday, July the 14th. So it's really quite simple at this point, really, I have to say. So just want to present two scenarios in that obviously this is the crypto index here. I'm just using it because it's a nice clean plate here for this. And we can look at it in different ways. We can look at it well, as an A wave here fits best, and a B wave here, and a C wave here for a wave 4. And then in that case we have wave 1 down here. This will be the same for Bitcoin and Ethereum. And then we have wave 2, and with wave 2 here we can look back for a 50-60% retracement level, so that will be slightly different on each of them, but we just tucked in there on this. So market's like to gravitate to big numbers, so it may just come back to that price point there. So we would need an ABC correction in there, and we don't have that just yet. We just have the first leg of that as such, you know. And then if that is going to be the case, then we'll see wave 3 come down here, and then wave 4, and then wave 5. That will play out like that. Now across Bitcoin and the other markets, this wave 4 has been a little bit low down here where it should be up here further. So the other way to look at this is by putting wave 4 over here, and putting wave C over here for this, and putting wave B over here for this. So it becomes a slightly different pattern in this particular case. So we can look at this as the A wave to here or to here, so we'll just put it here, and then an A and a B and a C here for the B wave, so that will be of a smaller degree. So we can look at putting an A wave here for this and a B wave here. I mean, this has been a pretty scruffy sort of structure moving up there, so I'm sure that it's pretty easy to bend it whichever way you want. So if we just say that we'll leave it open and we don't know what that is, so this would be the ABC pattern here for another move to the upside here, which stands to reason. That's quite a nice pattern, and it's not too big for a wave 4 and so on. So and this wave 4 could also get more complicated too once it gets to this point, because it can be a lot bigger than what it is now. I mean, this wave 4 here I just thought was always a bit too small, you know. So obviously this is going to be following the tech stocks as well. So with the tech stocks we've got the same situation occurring here. But we've got ourselves into a reasonable corner here where because we can count 5 waves down here, any further breach of this low here, and you know that we're on our way down at that point, and the market's leaving this number, because that's really what it's always been about, this point here. So that's it in a nutshell. We've either got wave 4 here as a ABC pattern to here, and we've got this as wave 1 and 2 and coming down, or we've got the A wave here and ABC over here for the B wave, and we're going up for the C wave here. That can go up higher and also get more complicated, so we could end up changing this to all sorts of different wave structures. But the main point is that if this market finds support on 6,500 here, then this crypto index is the top 10, so not everybody will have this particular index, but not that it matters. But we'll look at the same for Bitcoin. It would just be the same sort of thing. So above, it doesn't matter if it's Ethereum or Bitcoin, find that top, find that low, go to the 61.8%, gravitate over to the closest largest number and use that, because that will be the important point at that stage. So that's that really. So let's just rinse and repeat with Bitcoin here for a moment. So we've got this low here. We can look at it as an A wave, a B wave, and a C wave for wave 4, and then we come down here for wave 1. Well, in this case here, I'll just, Yeah, I've used the wrong ones, but it doesn't matter so much. So we'll just put this as 1 here and 2 coming back into this space here for the moment. So, I mean, I would like to lift it all up from a minor degree to an intermediate degree anyway, but it doesn't really matter. We've been down here counting 5 waves yesterday and so on. And now we're looking at this move here. So let me just double check, because I think I did all this yesterday and I haven't tuned in this morning on this one. So not too bad. Yeah, so a little bit off all that, but so I would assume that this leg up here, I'll just clean this up here. We can either look at this leg here as wave A and then the wave B here. And then, well, we've got another B here. We don't want that. We want this C wave here for wave 2. So we'll either do something like this, something, I have to have a look at side of that, but it'll be something like that and then come down from that point. So this is what we're talking about yesterday with this ABC pattern. And the thing here is that, let me just check that. 1, 2, 3. That's a wave 4 here. 1, 2, 3, 4, 5. So we're pretty close. We're getting an impulse wave here. So the B wave can come back to, let's just say, somewhere here. That's where the supply is. It can come back to here for this, which is kind of important. If I put this here and this here, and then remove that, and that means that we can go short under here. And then we can also, once that B wave is developed, we can look at, let's just remove that now, we don't need that. We'll just put that there, and that will be in 3 waves, and it might not come that low in that. We're just looking at the wave 4 of 1 lesser degree, wave B here, and there's probably more upside. I'd have to have a bit of a closer look at that, but just getting it reasonably close so I don't look like a total tosser. So yeah, so that would be the point here. So in this case, if this was going to be 1 and 2 here and then going down for 3, we can go short under here. But normally I would like to see working this little area over here, working the 20,000 here, major trading level 2 over here, and looking for some sort of resistance at that level, be it like that, and work up from the lows rather than over here for that. But you could probably get a classic trading levels pattern at 19.5 there or something. So that would be that, and that would be the short side, and I'll just copy that and put that there. So we've got a nice 5 waves down here. Everything seems pretty spot on, really. I mean, the extensions in wave 3, wave 5 and wave 1 are the same. Everything seems to fit. We went over that yesterday. So that's that. So soon we'll know if we've got a bearish pattern or a bullish pattern. Now, the bullish pattern is, to me, just a corrective pattern to the upside. So this would be wave B over here. So I'll put wave B directly under wave 1 here, and then we would look for wave C further up here. And then we could grab this wave C here and put it down here for this wave B here. And look at this here as an A wave, a B wave and a C wave here. So an A, or need the A wave over there, don't we? So we need to put this A wave over there. So the A wave here, an A and a B and a C for the B wave here, and that can go up to there, and that can go here. So that sort of thing, you know. So we'll see. I mean, the other important thing here too, I guess, that when we're working with a large number, in this case trading level 2, major trading level, these are minor levels here. So that's group 1, and then group 2 below is this lot here. And so this is the swing range for the market, working with this price point here. So support on top of 23 takes you up to 25, and resistance here at this group take you down to 15 at that point. So it's good to know that, because if it gets a tested support on 23, then you know it's leaving the 20,000 to the upside, which is a big deal. And the same with the downside. This area here is resistance, the 16,500 as resistance. It tells you that the market's leaving this number for good, you know. And when the penny drops on that, you can use this with any price. You could use the 21 here in both. There'll be this is a minor level here, so there'll be sub levels 21, 21,100, 21,200, 21,300. That's the top of group 1 at that point. So you can use it with any, and then you can drop into micro levels. It's just fractals, that's all. And it's good really, because it brings out the psychology. You start to understand the psychology of the markets better. So anyway, apart from all that waffle, this will be the thing. And to the upside here, all you need here is a classic trading levels pattern. So when you get to the market here, there'll be some not a big deal, but there'll be some little kind of pattern here, that first high above the level there, that will tell you that you're going higher at that point. Now, in this case, because we've got the bigger pattern here this time, we should be going up further at that point. But we do need to get support on top of 23 there. That will tell us that this correctional pattern here is finished with this number, and we can work higher. How higher can we go up here? Well, we'll look at that in the next video. We did look at that yesterday. But I just wanted to keep it simple today, and they're the two facets of the current situation. And look, it's just going to one of these are going to happen one way or the other. It's that sort of simple, really. So it's working itself into a corner, and there you go. Alrighty, I'll leave it at that. Cheers.